What if everything you've been told about investing, stocks, mutual funds, 401ks, isn't just incomplete, but it's actually keeping you stuck? Well, it's time to rethink what investing really means if you want true freedom. Listen now. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you. You've worked so hard for that money, and you're now ready for that money to start working harder for you today. You want to become work optional. You want to be able to create enough passive income so you work because you want to, not because you have to, because you have enough passive income to cover all of your expenses and all your family's needs. But it's not just to help you and your family, but it's more than that. You want to create a rich life because as you're blessed financially, you have the greater means and resources to bless the lives of those around you and create that ripple effect. That is what I'm here to do for you today. Thank you so much for tuning in, binging, and being a part of this movement in an effort for us to create at least 1,000 families financially independent by the year 2030. And that could be you. If you'd like it to be you, check out more at our website, moneyripples.com. So how is Wall Street's definition keeping you trapped? How is the typical thing you hear about investing with 401ks, mutual funds, stocks, bonds, all this kind of stuff? How is it keeping you trapped right now? In fact, it might be the very thing separating you from real financial freedom. Now, if you've been a listener to this podcast, you've probably already heard some of these things that I'm talking about today. But I really want to dive deep into this myth because the myth has been taught for so many years, especially over the last 40 plus years, is that we really have been disconnected from what investing really is, and especially investing that creates passive income and true financial freedom and time freedom. And sadly, it's not usually in Wall Street, it's actually in the alternative investment space. And so I want to talk about this very concept because I think this is where most of us get hung up. Because if you ask anybody on the street, and I mean, well, okay, maybe not anybody on the street, but most people, especially if they're savers, if you ask them, where do you invest, right? They will say hands down, stocks, mutual funds, 401ks, ETFs like the S&P 500, SPDR, ETF, things like that. They'll say those kind of things. Now you might even get some people starting to venture off into digital assets, right? Maybe like Bitcoin and things like that. But for the most part, if you look across the generations, not just the younger generation, you're going to hear people talking about stocks. And this is the one thing that is a myth that I believed in as well. Remember, I was a financial advisor in the early 2000s. I was trained that really stocks were it. And in fact, if that weren't worse, and I want to go deeper into my story than I often do, but even worse is that I was also a stock trading coach, right? I taught people how to trade stocks and options. So my whole viewpoint of the world was investing equaled stocks. That was it. Yeah, bonds and things like that, options, whatever. But for the most part, stock market was investing. Wall Street was investing. And that is where we get stuck. Because I know from my own experience, right? As a financial advisor, I was teaching people about mutual funds primarily because why? I was Series 6 and Series 63 licensed, meaning I could sell you, not make you money, but sell you securities. Securities were managed by the SEC, the Securities and Exchange Commission, which included a bunch of mutual funds. And so whenever I talked about investing, it was always focused around Wall Street. Heck, even I grew up with that. 80s movies like Trading Places. You guys ever watch that movie with Eddie Murphy and Dan Aykroyd? Yes, I would watch that too. That's when I first learned about commodities, right? They talk about orange juice or whatever it was. So there was things like that. You always heard about these stock traders, people on the floor and ticker symbols and ding, 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 all that kind of stuff, right? That's what you always hear about. I mean, even when they bring up the economy or even like the markets, it's always the stock markets. And this has been perpetuated for many, many years, but more so recently because in the 1970s, we started to see an uptick, a boom in financial advisors coming on the scene. This is when we started to see it become bigger and bigger. And insurance salesmen were there too, but definitely the whole, basically put your money in mutual funds and invest it forever. Because what happened is people were really at the point where they had to stop relying on pensions. Remember, companies used to offer pensions, and that used to be a lot of people's retirements. But as that started to dissipate and disappear, especially as the baby boomers came up through this. Then they started to bring out things in the mid 80s like the 401k. Now, granted, the 401k existed 10 years before that, but it was primarily for high incomers, people that are in the highest tax bracket, because in the 1970s, there were tax brackets up around 80% if you're in the highest bracket. So you wanted to delay your taxes to a future date because you were hoping that you wouldn't be necessarily making, at that point, hundreds of thousands, if not millions of dollars a year. You wanted to be in a lower tax bracket because, of course, back then you could live on less. And so a lot of people would put their money, the executives would put their money in the 401k. But of course, the government, they had a problem. And also financial companies, they were looking at a need to solve as well. The government realized the problem was, okay, people aren't getting pensions and now they're coming to us for Social Security. We didn't really think we had to. So we've actually been pillaging people's Social Security to pay for other government programs. And now all of a sudden they're saying, oh, shoot, if this keeps up, especially with the baby boomers having so many workers, because again, it was great when the baby boomers are working, but what happens when the previous generations retire and the baby boomers have to retire now? And now there's less people, less population to fund their Social Security. They hadn't really thought this through. And so they were thinking, what can we do? So they partnered up with Wall Street and said, let's make this happen, right? Let's see if we can make something work. Wall Street's all for it because the more money you put with them, the more money they make. Even though it's not big money, they know getting to the general population, the masses, would be a big deal. So that's why the 401ks came. We always had IRAs, of course, right? And then eventually the Roth IRA came out, in the late 90s, going into the turn of the century, or really the millennium. And so we had all this stuff coming up, right? And this beautiful partnership between Wall Street and the government made it easy because now all of a sudden, all these billions of dollars of marketing was going into teaching you that investing equaled Wall Street. Investing was stocks and mutual funds. Investing was going into those retirement plans you've been sold on for so many years. Because again, the government wants that to be sold. They don't want to have to be the one footing the bill for you not preparing. Because they took that away. And then, of course, pensions were taken away because companies weren't doing that anymore. And that's where we ran into the situation that we're in today. So when I was a financial advisor in the early 2000s, of course, everything was about Wall Street. Everything was about stocks, bonds, and mutual funds and things like that. And then I became a stock coach. I actually got offered a position to start coaching people how to trade stocks and options with a particular company. And so this company was selling it left and right, helping people do their own thing. And so in my mind in 2005, I'm thinking stocks are it. And I started to realize, I'll tell you this, I started to realize that Wall Street was bigger than what I initially imagined. Because as a very narrow-minded financial advisor, I was really hyper-focused on just what I was allowed to offer my clients. They were primarily just mutual funds, right, of all sorts. But then I started to realize when I started talking to stock traders, they think that mutual funds are a joke. They're like, these things are ridiculous. You get paid nothing. You take these higher risks. You get vanilla returns. Why do it when you could trade on your own? But here's what I discovered while doing that is that over time, although I could see that, yes, you have a greater potential for making more money in the stock market, you also have a greater potential for losing more money. Now, this might sound like high risk, high returns, and to some level that's true. Although I'll address that myth later on because that is not necessarily what we want to believe, because there are some exceptions and even really some truth that makes that myth false about high risk and high returns. But obviously, I was telling people like, yeah, you can do your own trading, but for the most part, what I noticed is most people lack the discipline to actually make that work. So they were taking higher risks, and maybe they could get higher returns, but in many cases, in fact, in most cases, they got lower returns than their mutual funds. And this is why this supported the narrative that I had as a financial advisor. They always taught me, they brainwashed me to believe that really your clients that you're going to encounter lack the three T's: the time, the training, or the temperament to be able to do their own investing. And that's why they need you as a financial advisor. And you just need to create the fourth T, which is trust. So they'll just trust you. And so that's what I was doing, right? And so, yeah, I saw the possibility. I saw you could trade stocks and options to make more money, but I knew the vast majority of people, because they lacked the discipline, even to follow the rules we taught them, and even strategies that did work. Like I actually implemented strategies that worked better than mutual funds doing stock investing and options trading. But the problem was that most of the clients that I knew that I was coaching, if I wasn't holding their hand and keeping them accountable, they, when they're left to their own devices, would screw it up somehow. They would make worse returns or even lose money. And that's one thing that you have to be cautious of. So, getting to the end of 2005, remember I had sat down with my dad, realized that he only had 5 years or 6 years worth of savings left, and that he needed Social Security even to help stretch out some of his dollars. But ultimately, he had to work another roughly about 10 years until he could finally retire. Right. And at that same time, that's when I started talking to that friend, that friend that I hired to be a financial advisor on my team. He quit in the summer of 2005. He went to go do real estate investing. And then we're talking after Christmas of that year. And he's telling me how things are amazing. And I didn't believe him because he started telling me like how he's making so much money in real estate. And remember, in my mind, I'm thinking, I'm looking at all these charts that I was given as a financial advisor. And you look at real estate just was kind of like that low line. If you invest a dollar in 1928, what's it worth today, right? Real estate was just above the inflation line reported by the government numbers. And so when he was telling me he's making so much money in real estate and that him and his dad have partnered on some deals, and he and his dad have actually, doubled his dad's income, his, passive income that he's making at his, as a career as a college professor, he's now making double that, right? He's now making just as much as he was a professor. And I could not fathom it. It just did not seem, it seemed too good to be true. There's no way. And I even said that. I was like, no, come on, that's too good to be true. It's not possible. And that's where we actually got into this debate. I always kind of skip to the key point of the conversation when I retell the story. But really, we debated back and forth, like what's better, stocks or real estate? And he was talking about how real estate was real assets and you can create cash flow and whatnot. I was arguing that stocks are better. You can make higher returns in real estate. Real estate, you don't make much money in, because I didn't understand the different ways you can make money in real estate. And long story short, after that debate, he paused it. He finally stopped. And so he was a little bit worked up. He was annoyed with me at this point. He says, well, Chris, what principles are you teaching your clients? I'm like, what? What do you mean by principles? And then my mind starts racing. I'm like, you mean like rule of 72, compounding interest? Because I would teach that all the time, right? I would teach that, I would misquote the Einstein quote about it's the compounding interest, the eighth wonder of the world. Yes, I used to teach that, even though now I know it's not a real quote from Einstein. All those things, right? And he's like, no, Chris, that's not it. He's like, okay, let me ask you this, Chris. How many of your clients are truly financially free where they're not worrying about money every day? And as I really thought about it, I said, well, okay, they all worry about money. I thought about one particular client that was a retired physician, but I remember like every time I'd go talk to her, she's like turning on the news and CNN and she's freaking out about what she's doing. And even though I'd say, hey, let's move you into something that's not market dependent, she would still freak out because maybe the economy would do something to the thing that's not in the stock market, right? But again, everything I was looking at was stock market related. By the way, even when I met with my dad, a month before this conversation with my friend, I'm meeting with my dad and I said, like, man, like, I don't know what else to put you in. Like, you've got an asset, you've got your paid off house, but I wouldn't dare put that in the stock market. So even when I was thinking in my mind, trying to come up with solutions for him, I was really trying to get creative. I'm like, oh, there's annuities we can put money in. There's some guarantees, but if the guarantee, if they don't quite perform enough to outpace the interest you're paying on the mortgage, it doesn't make any sense, right? And what if I put in the stock market? Yeah, you might have higher earning potential, but what if the market goes down? Now you're screwed, right? So as I'm thinking about all these people, I'm like, well, none of them. I can't think of anybody who's financially free, not worrying about money, even the retired ones. Okay, Chris, well, how about this? How many of you guys as financial advisors are financially free, not the commissions you're earning, but actually doing these investments, actually using your mutual funds, not the commissions, right? Because that was the thing. All these financial advisors would talk about all the money they would make, but it was all based on sales. It was all based on, if they built a big team and they're getting overrides and things like that from their advisors and agents and people like that on their team. And I was like, well, yeah, I guess none, because there's guys been working there since the 1970s and they're still going and they don't look like they're slowing down at all. In fact, really the feeling I had from them was like there's still money scarcity, a lot of money stories and scarcity involved. Even though they might have made decent money, I could still tell that they didn't feel free either. So I said none. I thought about one guy that might have been, but I did find out a few years later when he got fired from that company. He had, violated, some rule that they had. He was scrambling, trying to find a way to make money again. So even the guy that I thought he talked a big game, he was dealt with, high, affluential clients. No, he wasn't either. So anyways, long story short, that's when I started to realize, okay, you've got me. Now he was of course annoyed with me. He's like, whatever, dude. Like sure. I'm like, no, come on, man. Like, give me something. I'm open now. I'm listening. Because really, he got me. I mean, with those questions, those three questions, I'm like, I have no clue what he's talking about. And two, I obviously what I'm doing hasn't been working. Give me something else. And so he had me go read the Robert Kiyosaki book called Who Took My Money, which talks about why mutual funds fail. And then he said, go listen to this talk show, this AM talk radio show with these two real estate investors. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. And it took a couple months, but my world started to diverge at that point because now I created this cognitive dissonance, right? What I believed versus what I was starting to see as reality. And especially I started to see more and more examples of how these guys doing real estate investment were making so much money. Granted, these guys, most of them, not all of them, but most of them were active real estate investors, meaning they were actively buying and flipping houses. They knew the strategies to do. But when I started blowing my mind as I'm talking with my friend, he's saying, hey, well, some of these passive strategies at this time, there's people being credit partners, people that would use their credit to buy the property for the investors, right? So they'd buy the property at a low value, and then the investors would pay them a little bit above their mortgage payment. So these people would just use their credit, no money out of pocket, because back then you could actually do 0% down if you had good credit with even investment real estate. So they would come with no money out of pocket. They would get the mortgage, but then the investor would pay them a little bit more than the mortgage payment. So they would make maybe $100 a month or so just using their credit per property, right? So they would do that. And then there's people, of course, that were lending their money to these investors. And I realized, like, wait a minute, some of you guys are, now there were some obscene amounts of return they were paying them for lending their money, but it was like some cases like 2-3% a month or more. Although the more, definitely even the 2 or 3% a month was not sustainable. But at that time, they were flipping properties so fast and there was so much appreciation, they didn't care what they paid. And so there's people making like, say, 2% a month on their money. So if you had $100,000 you lent these guys, you're making $2,000 a month. And I remember thinking from my brain, again, from a financial advisor brain, stock focused brain, I thought, man, like I was thinking, not 2 or 3% a month. It was like 3% a year you pull out. If you have $100,000, you might pull out $3,000 a year. And then I'm hearing about these guys making like 20, 30,000 a year from that same 100,000, right? It was mind boggling. But it was also created a lot more hope because I said, wait a minute, this is the answer. And this is the problem, guys. Everybody believes that investing means stocks, but that's what mutual funds, really money managers and financial advisors have led you to believe because their bosses, who are actually financial institutions like the Fidelities, the Merrill Lynches, the Goldman Sachs, all these companies, they're the ones shoving this down your throat. They're the ones that are constantly berating you with advertisements and with education, like all the education. If you notice it really is all sponsored by these companies and they're shoving it down your throat to the point where you've heard it so many times, you believe it. People would always ask, about Nazi Germany, like, well, I'd never do that. How could they do it? Well, it was easy. Psychologically, they've already proven it. If you tell somebody a lie enough times long enough, by the way, that's what one of the propaganda specialists of Nazi Germany believed. If you tell them a lie enough times, they start to believe it. This is what's happened for you. You've started to believe that stocks and mutual funds are the way. And it doesn't help if the market's going up, does it? Because if the market's been going up, you don't have a rational reason to give them to say, I shouldn't be doing this. But the rational reason is pretty evident because if you've started to listen to some of these episodes, right, especially if you went back to the ones about what's the real return of the stock market, it's not 12%. You find out it's maybe closer to 8%, but you can do so much better. And by the way, even if these alternative investments I'm talking about would pay the same, the difference is that in an alternative world, especially the world backed by real estate, and there's businesses too. It's not just real estate. There's businesses. There are things like oil and gas. Yes, digital assets are there too, although they don't cash flow. Just like gold and silver doesn't necessarily cash flow, but it can be a great way to build more wealth or secure it and things like that. You start to realize that there's all these different things, private equity and all kinds of aspects of business you can invest in too. That's why you can buy franchises or be a partner in a franchise or some kind of business model. and get paid from that. In fact, they might even pay you as a debtor. So where you're actually in first position, that you get paid first before everybody else, even the equity account holders of that business, right? Even the business partners, you get paid first if you're in debt position. I did another episode on that recently. And so you get exposed to all these things, and it opens up this whole world. You realize, wait a minute, this is exactly what the wealthy have been doing for years. This is what all the hedge funds have been doing for years. All this time, you've been led to believe if you're middle class or even lower upper class or even middle upper class, right? It's not until you get to the upper class, when you get tens of millions of dollars to invest, that's when these family offices come out. That's when these hedge funds and everybody else comes and says, hey, I've got some stuff for you. And it's not just thrown in the crappy stock market. This is when they start to look at private equity. They start to look at real estate of all forms, right? Just like the ones we talk about in this show. That's when they talk about possibly using digital assets, gold and silver and everything else. They're already investing in the alternative investments, and they've been doing it for years. They've reserved it only for the rich, only for the wealthy, and sometimes the ultra wealthy, yet you have the same access. You're just not told that because the financial advisors never get paid if they tell you about this stuff because they can't offer it legally. They're not allowed to. They have a license that specifically tells them this is all they can offer. This has been the weakness. And when you realize that, you wake up to saying there's this whole other world. And just like I did, right? When I woke up to it, I said, wait a minute, I can make so much more income with less money. Wait a minute, maybe my dad could even make more income with less money. And yes, I even tried to see if I can get him introduced into that world a little bit too, because he was getting desperate. He was wondering what he could be doing. And really, his money was all locked up in 401ks. He couldn't invest that. That's the thing. Had his money locked in prison. And so when you can get that money out in your possession, in your power, and then use it to get it out and invest in passive investments, and you start to do these alternative investments, you start to realize, why did I do the stock market in the first place? Why was I worrying about trying to make maybe 8% a year in the stock market to then only live on 3% a year if I'm assuming I'm retiring in my 60s, 4% if you're retiring in your 70s, as we already explained, 2% if you try to retire early, right? It's just nothing. As opposed to, because again, $1 million, you live on 3%, that's 30,000 a year. But if you have $1 million and now all of a sudden it's making even just 10% a year, most of the investments we talk about today, we try to go for more of the lower risk type of things. 10, 12% is very typical. It's not guaranteed, but very typical. Sometimes contractual. Sometimes that's the contract. They say, we agree to pay you X% per year or per month or whatever it might be. So often it's between 10 and 12%. Do the math. Even at 10% on $1 million is $100,000 a year versus pulling out $30,000 a year because you're worried about whether the market might drop or not. And therefore you can't take out too much or you might lose money faster and run out of money before you're dead. Instead, if you can pull out, say, 10% a year, that's $100,000 a year. If you make 12% or 1% a month, do the math on $1 million, that's $10,000 a month. For many of you, that's your goal. Some of you have a bigger goal than that, but that's your goal. So when people ask me, they're like, well, how much money do you need to live on? Like, what is it? What's required? If I want 10,000 a month, I said, well, it depends on the return you're getting. But if you want to have 10,000 a month and you're making 10% a year, you need 1.2 million to work for you to do that. Again, everything can vary. There's also different variances of how much you pay in taxes on some investments versus others. But again, that's another thing too. Tax benefits. Are there really tax benefits in the stock market? No. That's why you need things like a Roth IRA. I mean, I won't even say that 401k or an IRA are tax benefits because they're not. They're just deferring or delaying your taxes to a later date, right? But even with a Roth, still, that's the only hope you have for tax-free money. There are literally no tax advantages to stocks and options and bonds and things like that. Mutual funds, doesn't matter. They have the the full tax exposure. You have to have a government plan to throw them in. And a Roth IRA, by the way, you can't put enough in those things. Even a backdoor Roth, what if they close that back door on us, which they've been threatening for years, right? Especially more recently, and depending on who's in office. So you get all these kind of things. You're like, my goodness, why would I do that? When real estate, I get tax advantages in some cases. Business, I get tax advantages, right? There's so many ways to get tax benefits and more passive income. Why would I do that? And this is why, guys, it took me a few months, but this is why I couldn't make the two worlds work, because as it started to diverge, and I started to see, here's what I've taught. And this has been leading people to not becoming financially free. Because remember, Tony Robbins says success leaves clues. And really, there's not many clues, that proof that shows you that people are retiring very comfortably, stuffing money away unless they're dirt cheap in how they live. This other side, this alternative investment side with real estate investments and things like this, with higher cash flow and income that comes from that, here the evidence is more than abundant. But again, the reason you don't hear about it in the news and the media as much is because companies aren't trying to sell you on this stuff. You're not having the big institutions saying, hey, you should put your money here. Because remember, most of the stuff is private investments that people are doing that they're not going to spend millions or billions of dollars to try to shove it down your throat to advertise it to you. They're just going to offer it. And of course, because it's good, they don't need to necessarily pimp it out so much like you have to in Wall Street. With Wall Street, you have to keep continually using that propaganda and brainwashing to keep people believing it. You can do something better. You can do just like what the wealthy have done, even if you're middle class, right? There's, and that's what blew my mind. That's what opened my world. And that's the world I want to blow open for you, is that when you start looking at mutual funds that perform so poorly, and even the S&P 500, that's only averaged now 8.4% the last 30 years as a real rate of return. And by the way, most mutual funds never even get that return. You start to realize, why would I be taking all these risks, worrying myself to death about whether the market's going up or down, what's going to happen with Trump or with tariffs or inflation or Iran or anything else? It's like, I can just focus on what's working regardless of all that crap, the day-to-day stuff. But the market's so crazy. It's like a day-to-day fluctuation. That's another reason why I'm not a big fan of digital assets, because again, day-to-day fluctuations, right? I don't see that in real estate. You don't see that in normal business. That's only in things where people are massively trading. And by the way, with all these HFT, these computer trading modules that are literally making thousands of trades per second, you don't have a hope, right? That stuff can go all based on algorithms and everything else. It could literally tank a market, or it can cause it to overinflate, and there's no reason for it, right? So there's all these uncertainties that you have no control over. And when you lack control, you lack peace. Again, I'll say this again. When you lack control, you lack peace. You can never have freedom when you don't feel like you have any kind of control. If you feel like things are at risk, if you feel like you're at the mercy of somebody else, you will never truly be financially free. So why would you keep planting your money there just because billions of dollars have been shoved in your face, advertising it, shoving down your throat so that you would be brainwashed to believe that that is the only way to go? Stocks is not the only investment possible. Options are not the only investment possible. And take it from a guy who is not only a financial advisor, was also a stock trader, an options trader, had done all those different things, made money in those things, and yet found way more wealth, way more money, way more growth with more certainty and less risk and less volatility by doing it in these alternative investments, things that are backed by real estate, things backed by business, those kind of things, that worked. Not the former, not the stocks, the bonds, and the options and the mutual funds. Those have not worked yet. These have. And it not only has worked for me, but it's been duplicated many times for our clients as well, to where now it's just commonplace. It's like, yep, okay, another client today has got increased their cash flow, but another few thousand a month. Woohoo! We're excited, but it's just commonplace for us. Like, it's something we see day in and day out. Yet, I'll tell you, if the market's not going up, you will not see it there. You will see many people freaking out, and the market is at a point where it's so oversold. This could be the worst time to be in the stock market. Putting more money in right now would be the most expensive time because the market's so overvalued. It's so crazy that you have more of a risk of losing money at this point than ever making money, right? Which is why Vanguard only predicts a 3 to 5% average return for the next 10 years. That should be concerning to you. That's why you might consider moving away from stocks and mutual funds and bonds and things like that, and moving to a place where you can still make money, because those markets aren't oversold. They're not overvalued. There are some that have been, but there's always different places you can have money where it's not the issue. So I'm not trying to give you investment advice, because again, you're in a different situation, and I'm trying to give you a legal disclaimer here, but I am here to tell you there's a lot more hope over here than there is over there with those guys who just, again, are marketing their tails off to brainwash you. Break free. The only way for you to become an intelligent and smart investor is to break free away from that brainwashing, that conditioning, and do something different and find a way to become free when most of the people are just hoping and praying their money will last them long enough. That's the difference. Again, if you ever have questions, you can always visit us, moneyripples.com. Make it a wonderful and prosperous week. We'll see you.